Let's also welcome on board Mayuresh Joshi and talk about what he's making of the markets right now. Mayuresh, hi, afternoon. What are you making of this comeback in banks? And if one has to really tide this recovery in the banking pack, what would you prefer? Private, banking, PSU banking lot, and what within that?
Afternoon, Aisha. So again, I think the banks have been very, very resilient in spite of what we are seeing in terms of global macros and even the local macro concerns that are now emanating. And therefore, if you probably look at the diversity in terms of how numbers have got reported, whether it's private or public, the numbers have been exceptionally good in the quarter gone by. Expectations in terms of the festival season in the second half will probably mean that the advances growth should continue on a very strong footing. Obviously, I think the kind of deposit traction that a lot of these banks have seen, the lack of liquidity in the system with the RBI clamping down in terms of the reserve ratios will probably mean that NIMs might probably compress. But overall, I think the advances and deposit growth should be reasonable enough for the system as a whole. To top that up, Ayesha, I think as the fact remains, the asset quality pressures have come off significantly for the entire banking system as a whole. Provisioning remains extremely strong for both private and public, and capital adequacy remains quite stable for the larger private and public banks, and some boost that is coming through capital raises for the mid-tier PSU banks as well. Putting this in context, our system probably looks better placed, and therefore within the private space, we've obviously got HDFC Bank on our watch list. The bank has really done nothing, and therefore if you probably look at how numbers played out, they were a little bit conservative in their advances growth, specifically in terms of being very, very cautious on the unsecured lending segment. But going forward, I think the advances growth should be very reasonable. With the merger that has probably come through, the access to deposits will mean that the compression in NIMs will be relatively lesser compared to the other banks within their domain or their market cap size itself. And therefore, the underperformance might have just got played out. HDFC Bank can actually turn out to be one of the big winners over the next few quarters. In the similar breath, within the public sector enterprise universe or the banking universe, obviously State Bank had a very decent set. Obviously, some numbers in terms of providing stability onto the balance sheet in terms of ECL was something that played out in this quarter. But banks like an SBI or even a Bank of Baroda should definitely be kept on your watch list.
Point taken. That's the word coming in as far as the private as well as the public banks that Mayuresh is liking at this point of time. You know what? Tomorrow is an important day as it is for the banking sector because that was a timeline of review for the ICRR or the incremental CRR that the MPC meeting had actually levied on the entire sector. What we are picking up from sources, and this is something Ankur, my colleague, had broken the story, that perhaps the ICRR might continue for a few weeks, but there's also a bit of chatter that instead of 10%, maybe the number will come down to 5%. Maybe that's what the street is baking in. In fact, if we can, let's go across to Ankur to get a sense as to what the latest details were on ICRR, because he was talking about how the meeting is underway, and then of course the ICRR might continue for a few weeks. But then just shifting focus away from the banking sector to the power sector as well, because that's a space which has been seeing quite a bit of buying action, and not just your pure play generators. There's a lot of action in the lenders, the names like RECPFC as well. Now Coal India is also seeing quite a bit of traction. Mayuresh, what's the view here on the power sector, and which is the name that you like?
Afternoon, Anisha. I think the sector has done phenomenally well. And again, the kind of surge that we've seen in power demand, lack of rains, power demand has shot up quite significantly the last few weeks. And again, as we know, October, November, the demand shoots up as the heat wave probably progresses across the country as a whole. Having said that, the entire power chain, Anisha, whether they are generators, transmitters, EPC players, financiers, have all probably done well. And there is a structural element to this. You're probably talking about the renewable part increased 10x over the next few years. Take an instance, NTPC, they're expecting their overall nameplate capacities to reach 130 gigawatts over the next 7 to 8 years, out of which 60-70 will be contributed by renewables itself. So the kind of capex that will go in terms of incremental power capacities, the need for power cables, the need for transmission towers, the need for transmission lines, and financing all these elements put together will probably mean that the structural story for the power sector probably remains intact. Having said that, I think a lot of stocks have probably moved up. The likes of PFC, REC have probably moved up quite significantly. Dividend yield, again, is a huge comfort factor for all these stocks. And therefore, the momentum might continue. Fresh investments, pullbacks, anybody holding can definitely hold on. Within the public sector enterprise generating part, my own sense is that stocks like an NTPC, as an example, can definitely be kept on your watch list. As I said, incremental capacity is coming through, expectations in terms of free cash flows actually improving over the next few quarters. And the yield factor remains very, very supportive as well. Power grid from the transmission part, the capacity capitalization to capex ratio remains strong. Incremental ROEs should improve going forward as well. And therefore, I think this space structurally very positive. Pullbacks needed on a few stocks like NTPC Power Grid can definitely be kept on your watch.
Coming in the power space, cap goods, of course, holding out very well. Page Industries has climbed up almost 4% right now. And L&T, like we've been flagging off, 28.44 in the futures now. That's again off about 4% on L&T as well. But Mayuresh, can the stock be bought or can you add positions here at these levels?
Yes, on pullbacks, definitely yes, Aisha. And I think the new order that has come through is a huge boost because what you're seeing on the existing order book that L&T probably sits on, the orders that are coming through from the hydrocarbon segment are going to be margin accretive orders. By margin accretive, I mean they're going to be stable margins going forward. And as execution improves, the expectation in terms of the NWC, the net working capital, actually remaining stable is a given fact. The other element in terms of such a strong order win probably means that the kind of revenue visibility that L&T always had would continue, and the diversity in which the orders are coming through. And more orders will come through even on the domestic front before we hit the election mode by the early few weeks of the new calendar year will mean L&T will gain more orders as it comes through metro or the infrastructure development work, even if India is concerned. And therefore, I think all the elements coming together and the incremental ROE should remain stable or improve. So yes, remain extremely positive on this stock, Aisha. Any pullback can be considered a good time option.
The question, Mayuresh, on Page Industries, for the last many quarters, the stock actually has been disappointing with its earnings. Do you think the worst is over and one should look at Page Industries positively, or should one wait for a couple of quarters and that numbers to actually turn around before buying into this?
You're absolutely right. I think the numbers were relatively soft in the quarter gone by. And a lot of their peers actually did relatively better. Obviously, I think with the kind of franchise routes that Page Industries has at this juncture, the kind of brand presence that it probably carries, any recovery that comes through in terms of both volumes and price will get reflectively priced in as numbers start re-rating themselves. So by this, I mean that you probably need to give it one more quarter to see how Q2 numbers are playing out, what management is probably viewing the entire macro market to be. And within the space itself, in lieu of competition, how are they expected to play out both in terms of volume growth as well as their margin profile as well. So I'll wait out for one quarter's numbers because last quarter's number, Anisha, were really, really soft. They really need one solid quarter to and a very good management commitment to back up, to give us the view that the next few quarters are probably looking like recoveries on the path and a significant one at that. So I think this quarter's numbers probably will lay testament to the fact on how Page might actually perform. So I'll wait out for this quarter's numbers to be very frank.
But Haldiram's, let me talk about the entire QSR space as well. Mayuresh, and the street is divided. Of course, these stocks are trading at expensive valuations, 60 to 80 times, but the likes of Devyani International are doing quite well for themselves. There was a note from Macquarie this morning saying that maybe street is banking too much on the World Cup, potential. What's your take?
It's always been the case, right? Any sporting events that probably come through, the expectations of significant volume growth is expected to play out very nicely. Now, the World Cup is happening in India, Anisha, and the timings largely will be day-night matches. So the matches will end up around 11:30 late in the night. And therefore, it should probably be favorable going by past records in terms of SSG growth. And a lot of more events lined up. You've got the Premier League football, which probably starts. You've got the Euro qualifiers as well. and a whole host of sporting activities lined up. So I think that becomes one reasoning in terms of volume growth for QSR stocks. But within this entire domain itself, Devyani's numbers were really good, both on a quarter-on-quarter and a year-on-year basis. Burgers relatively doing better than pizzas is what numbers probably suggest. And therefore, if you probably look at how Devyani has probably performed better compared to its peers. So anybody can definitely hold on and ride the momentum that this stock is probably offering. What we probably like in terms of our global focus list, Anisha, because Haldiram was just spoken about in terms of the deal with Tata Consumer, the kind of numbers that were getting spoken for Haldiram in terms of valuations will have a rub-off effect on Bikaji Foods. And we do have a bias towards Bikaji Foods. Obviously, I think the numbers for Bikaji within the same space, whether it's namkeen, bhujia, packaged foods, the sweets that they probably have, are expected to grow at a very, very decent pace, in our opinion. Margins should stabilize between 13.5%, 14.5%. New capacities getting added on basically will cater to the new geographical areas. And they're seeing huge demand probably come through. So some sort of a rub-off effect in terms of what Haldiram's valuations are probably getting sought after might have an effect on Bikaji, and Bikaji's dynamics also within this domain itself are looking relatively. So I think hold on to a few plays the QSR space, something that we like is Bikaji.
Suresh, we're just closing down, just 2.5 minutes left. But within the manufacturing space, which are your top recommendations and pick?
So I think if I have to club manufacturing and infra put together, L&T on pullbacks is something that we probably like at this point of time. And we are having a very close look at these oil and pipe companies. Something like a Jindal Saw remains on our watch list. Very strong order book at 1.4 billion between steel and carbon pipes, steel and ductile iron pipes, and pellet business as well. Debt has gone up for the acquisition that they've probably done and working capital requirements for the larger order book. But a large element in terms of more orders coming their way. We're just hearing the L&T order. We're hearing huge investments that the Algerian government will probably do, which might mean a huge scope when it comes to the oil and gas space for ductile iron pipes. Our own gas grid network that is expected to come up from 6 to 15 odd percent. Nal Se Jal Yojana will mean more demand for steel pipes over the next few quarters. And therefore, this space looks very, very interesting. I think within the broader infrastructure manufacturing space, do keep a watch on piping companies. They might do the.
Okay, great to have you on the show, Mayuresh. We'll let you go on that note.